Hi there, Serial Trader here. I'm going to do an update on crude oil in light of the absolute destruction we've seen recently. And I think it was probably over a year ago that I did a video on crude, and I was arguing that this December 2016 low, which was just over $26, would eventually get taken out before we could finish this downward correction that we've been in since the peak in 2008, which was at $147 a barrel. That seems like forever ago. But really, it's only 12 years ago. Okay, so now that we have taken out that $26 low, should we be looking for an ultimate low, like a generational buying opportunity? Well, that's not an easy question to answer. Longer term, yes, we should be looking for that, but right now, I'm not just that convinced yet. So let's just kind of go through this. So this was my long-standing kind of outlook, that we had this initial sharp A wave down from the 2008 high to the 2009 low. We had our corrective rally up in a B wave, and then we had a 1, 2, and there's actually a 1, 2, 3, 4, 5 of 3 there, and then 4, and then we come down in a final wave 5 of C to mark the ultimate bottom. So a couple things, they're a little off on this count here. You can see that we do have, and I remember I pointed this out a long time ago, but we do have slight 4-on overlap here on this monthly chart. But I think, if I remember correctly, if you go to a close only chart and just look at closing prices, we don't actually have that 4-1 overlap. So on a closing basis, this count is still valid. But on a intra-bar basis, it is invalid. So good to be aware of that. And also, this move down from this proposed wave 4 of C peak, so far, now it needs to be in 5. So far, it's only in 3. Now, that doesn't mean we can't get our wave 4 and 5 down to complete that larger sequence. That's certainly possible. And as far as some longer term targets, if we just go log scale, now that we have smashed some very significant lows, what real support do we have looking back here? Well, we have from 2001, we have $17, just above $17. That's a potential area to look for very long-term support. And then after that, we have this from 2001 as well, or sorry, no, 1998. That's $10 and change, $10.65, and then after that, we have $9.75. So I actually kind of like that area. If you get down to between $9 and $10, I mean, that is probably an incredible buying opportunity if we get there. Now, does it really sound that crazy now that we already went as low as $20 today? Okay, that's only another 10 bucks or so. We went down to 20.52 today. So it doesn't seem so far-fetched anymore. Anyway, that's the log scale. I'll get out of that. So there's this possibility that I'm working. I point out a couple small issues I have with it, such as the intra-bar overlap. But still willing to accept it as a potential count because we don't have the overlap on a closing basis. And this does look like a nice 5-wave move in progress on a closing basis. Now that I've presented that, I want to look at this count as a potential count. And we got A down, B up, C down for a larger W. So this whole sequence from 08 to 2016 was a big ABC for wave W. We have an ABC up for a wave X. And now, potentially, we have ABC down almost complete for a wave Y. And if that's the case, maybe we're going to bottom here, very soon. And this could be the generational buying opportunity right now. That's certainly possible. Not discounting it. Although this 3 down for W doesn't look proportional to the 3 up and 3 down for X and Y in this proposed count. But it's still good to be aware of. It's still potentially viable. And in this case, we wouldn't be looking to go down as low as $9 or $10, right? So I mean, obviously they're both extremely good buying opportunities longer term, even now probably. But it might get a whole lot better if we go to $9 and $10 as opposed to reversing, another 50% drop essentially from current lows that we've made. So I thought I'd point this count out. Now, what I'm really going to be looking for is, let's see here. We need to get a large degree 5-wave sequence off the bottom, right? We need this to be really confident that we have a generational low in place, and we need to see that large degree 3-wave decline to a higher low. Again, to be confident that we have a real major low in place, and we just don't have that yet. We're still in free fall, quite frankly, on the shorter time frame. So that's what I'd be looking to do. If you get this set up wherever we bottom, whether it's $9-10 or whether it's sub 20 or highly doubtful that somehow today was the bottom, the ultimate bottom, whenever that happens, you got to get that 5 up 3 down to really have confidence that you've got a major new trend starting. But one strategy here is I wouldn't play this with oil contracts for all the obvious reasons of rollover problems and the leverage and everything. But if you look at some longer term holdings that you want to start building, and there's a lot of oil companies that are going to get destroyed here, even as we speak. I'm sure there's lots of bankruptcies unannounced, but already in progress or in the making. But you buy the bluest of blue chips oil stocks: ExxonMobil, Royal Dutch Shell, Chevron, Total. You go for the super majors. You don't buy them all at once. You just start building a position slowly here at current levels. And I think as time goes on, as a generation progresses, the next 10, 20 years goes by, I think those will probably do extremely well. And that's certainly a strategy to do here. But do I think the ultimate low in crude is in place despite breaking the 2016 low? Not yet, but we're certainly getting closer. So yeah, that's really all I wanted to update there on crude for now. I'm certainly not seeing a trade yet in crude particularly, but as far as actual blue chip crude stocks, it could be the time to at least start building a long-term position in those. So food for thought. All right, Serial Trader signing off.